Hey, there we go. Okay, let me get you a little bit bigger here. There we are. Hey, what's going on, everybody? Christopher Inks with Texas West Capital coming at y'all live here right before the Memorial Day holiday weekend in the U.S. Just north of Houston here, thankfully, because Houston's had some crazy freaking weather the last few weeks, guys. The whole area. I'm lucky. I'm just north and just east of the worst. So doing all right here. Hopefully you guys are doing all right. It's been a hell of a couple of weeks here, or actually last week or so even, for crypto, right? We have we've got Trump, we got, who's now pro crypto all of a sudden. We've got Biden who said, oh, well, maybe I'm not so anti-crypto. We've got, everybody was down in the dumps about the Ethereum ETFs. Again, just thinking it was the end of Ethereum. It was trash. And that happened just last week. And then Monday, boom, everything changed, right? All of a sudden, Ethereum ETF approvals coming through, kind of. So we're going to talk about that a little bit today. Man, oh man, we might even, talk a little bit about what's going on with the government stuff there. Everything, it's just been so much. But at the end of the day, I hope you guys are paying attention and you aren't getting very emotional about it, because that's what's going to lose you guys money, okay? Before we get going here, do me a favor. Please go ahead and like the content here. Leave a comment, share, subscribe, follow wherever you happen to be following us. We're on Twitter and gosh dog it, Twitch and X and everything else. So please do that. That'll help the algos, give people potential opportunity to see what we're doing here. Okay. How are you guys doing? Andrew says, are we at 80,000 yet? I think we're headed that way. We'll see what happens. Remember, guys, here's the thing. Remember, this is the holiday week in the U.S. What does that mean? That means, first of all, it's Friday. Fridays are notoriously low volume anyway. With the big holiday weekend coming on, your professional traders, your companies, whatever, they take half a day. They take a full day off to get an extra long holiday weekend. If they're in work, I mean, they're already on vacation in their heads, guys. So, again, my thought still is that we won't see a really big move until we come back, maybe on Tuesday or sometime early next week. So just kind of keep that in mind if you're expecting some big move this weekend. I don't think it'll happen, but we'll take a look at some charts here in just a bit. All right. Like I said, I do have guests today. And so we've got Andrew and Tillman here joining us. How you guys doing?
Doing great.
Doing fantastic, Chris. Thanks for having us on.
Hey, man, always love having you guys on. And I'll tell you what, I always get a lot of comments when you guys are here. And surprisingly, they're not bad comments. They're usually good. They like so, I don't know if maybe it's the idea that we've got, 3 bald heads and beards coming at them. But, we might need to just start a show. I've been joking about this. We may need to start a show called, Beards and Bitcoin or something. And,
exactly.
Just throw it at them every week.
Something. It's been a crazy week across all of crypto and the collision course of crypto and politics and what happens there. Monday feels like a month ago, but Monday was a massive moment for crypto in general. But you begin to look behind the curtain and what's really going on, right? So you had a sea change at a place like Grayscale, where their CEO for a decade was out. There's a new CEO in who, by the way, his previous stops have been Goldman Sachs and BlackRock. So you begin to raise an eyebrow, right? Then you get some information from the New York AG that they've settled with Genesis for $2 billion. Again, another tie to Grayscale and DCG. Then you get another headline from the Bloomberg guys. Wait a minute. Ethereum ETF isn't going to get denied. We now think it's going to be approved in 48 hours. What? What are you talking about, right? So the entire crypto world not only believed, but had good reason to believe that the Ethereum ETFs were not going to see the light of day until Monday around midday. And that has changed the narrative across crypto and dominated the conversation for the past 4 days. But again, I think it's important to look behind the curtain with what's going on. We've gotten a quote unquote approval. It was for all intents and purposes, from the way that they handle things at the SEC, it was almost a default approval. There was no vote. There will be no public record of a vote. They just allowed it to happen. And then on top of that, it was an approval of the 19B-4 documentation associated with the process, with the ETFs being created. What hasn't happened yet is Ethereum ETFs aren't trading, and there's no date certain that has been given by the SEC or by any of the issuers when the Ethereum ETFs are actually going to start trading. You have to go through the S1 process for that to happen. There's a lot of sausage to be made associated with those S1s. And, I spoke with somebody that's very, very close to the BlackRock, ETF folks, and nobody's working over the weekend to hurry up and finish S1s. That's not happening. So we're talking about weeks from now before the Ethereum ETFs actually, begin to live trade. So there's going to be the interestingness and the drama in the crypto world is going to continue for a while, in my mind.
Yeah, yeah. And just so people understand, so what actually was approved, guys, was as Andrew's talking about there, it's that 19B form, 19B-4 form. And so what happens is that is it's a form that lets the SEC know of a proposed rule change by the self-regulatory agencies, the SROs, right? So in that case, that's like we're talking about the New York Stock Exchange and NASDAQ. And so what that does is that goes to the SEC and says, hey, listen, it justifies the new rules. And it shows that that they're going to support, the fair trading of markets. They're going to provide investor protections. They're going to provide all that requisite oversight procedures. So that's what was actually approved, guys. Now, so the S1s, which is what Andrew's talking about here, is still outstanding. Those are actually the registration statements that the ETFs need to have approved before they can begin trading, right? So it's basically for public companies that are based in the U.S. It just provides them with information on how the company plans to use the capital proceeds. It details their current business model, their competition, provides basically a really brief or a short prospectus on that planned security, which offers any kind of pricing methodology and dilution that's going to occur with the other listed securities. So, we say, okay, yeah, the ETFs were approved. Well, what was approved was that the New York Stock Exchange and the NASDAQ can
they're allowed to list them if and when they come out, right? So that there is an approved landing spot for when the S1s are approved. And so people know, like, S1s are done by, when you're going to take a company public, like S1s, that's also a requirement when you're going to take a company public, right? Those also have to be approved. So it's a procedural thing, but because we're so hyper focused on crypto and our little silo over here, it's important to know that we've got a ways to go. To get into the idea of, okay, what does it mean for Ethereum? Well, short term, it means that we're up 25% on Ethereum itself. So there's an immediate shock to the upside. But the Ethereum ETFs in and of themselves have a few problems that they're going to have to deal with. One, the immediate short-term problem, once these ETFs begin to trade, they've got a grayscale problem, right? Because Grayscale is going to take their $10 billion Ethereum ETF. It's going to transition from what it is now as a trust into an ETF. It's going to be the biggest by a magnitude of billions of dollars. It's more than $10 billion. It's probably closer to 12 because of the change in Ethereum's price. So you're going to have the same type of daily outflows from that trust as you did with GBTC. So there's already negative pressure associated with the price of these Ethereum ETFs. There's going to be outflows. There's no question there will be outflows. And then the second problem is a longer term problem. And you have to ask yourself this question. Bitcoin as a brand is well known across the entire globe, period, end of story, right? When somebody says crypto, they're actually thinking of Bitcoin for most people, all right? So that's an easy story to tell when you're sitting across from a person that's got 10 million long at Morgan Stanley at UBS. Bitcoin is digital gold. Gold has underperformed, yada, 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 but it's a safe haven. Bitcoin is a version of that. Do you understand? Yes, I understand. Let's put a little money into that. What do you say about Ethereum? What's the 2-sentence sales conversation of why you should allocate assets to Ethereum? First of all, they've never heard of it before. It sounds like a chemical in a shampoo bottle on the back of the bottle that nobody's ever heard of. They don't know what it is. If you're 67 years old and you're used to making asset allocation based on the way that Warren Buffett thinks, if I don't know what it is, if I don't understand it, I'm not investing, right? That is a serious hill to climb on the backs of outflows to the tune of $5+ billion from Grayscale's product.
I love hearing you guys talk about this. I know nothing about all the procedural aspects of what's going on. I do have a lot of fundamental knowledge that I would like to kind of use to ask you both questions. Because the thing that I see that's very troubling about this, regardless of whether it's trading right now or it's not, would you both agree that this is pretty much a foregone conclusion that an ETH ETF will be traded?
Yes.
And I think that's the shocker. I think there's a lot of people out there that fundamentally know the differences between each chain and know that there's only one that's been fairly and equitably distributed, which is the key piece to the Howey test that makes you a non-security, right? And so if I think the bigger question that it brings up for me, which is a negative, is why are we moving towards less clarity, regulatory clarity in the crypto space? Like, well, this is actually making more chaos and more misunderstanding, because now you have to ask the question, where do you draw the line? What other ETFs are going to pop up? If ETH is going to be an ETF, what about XRP? What about Cardano? What about all the litany? Like, are we going to have NFT ETFs, a year from now? That seems like bizarro world to me. Like, that honestly seems like, where is someone going to draw the line based upon technical expertise? When you define a market, when you define any regulation rule, the key factor is that you can define it absolutely, right? That there are unique attributes to that you can encapsulate in language and put on a piece of paper, and then everybody abide by those rules, right? So if ETFs are allowed for non-regulated securities that have been distributed by a central force for profit and continue to remain the central force in the effort of development, like, show me the distinction between that and a stock. I don't see it. And so, like, the thing that's crazy about this to me is that you would think that there's some responsible adults in the room that have used Ethereum and that have used Bitcoin and that have set up nodes and that have set up mining facilities and that can actually go, how do we build solid regulation in this space? How do we write a set of rules that everyone understands, that doesn't play favorites, and that really does put the consumer first? Because here's the difference between Bitcoin and ETH. The beginning of Bitcoin, it was a wide open opportunity for everyone to participate in. Sure, the creator knew about it first, but he was publishing these things onto forums, broadcasting to the entire world, please join me in this effort, before he ever mined the first Genesis block. So there was an opportunity, and people either responded to the opportunity or not. That is a free market. That is fair. That is equitable. When you talk about Ethereum, what happened in Ethereum was they created the supply, and then they distributed the supply to key counterparts that played an integral role in either development, distribution, funding, backing whatever they were looking for, just like a central enterprise would. There's no negative about that. That's how things have been done since the dawn of time. But you can't deny that that's a central effort. Whereas Bitcoin was not a central effort. It was anyone who responded. It was literally a open effort. And so that distinction is the dividing line between what can be determined as a for-profit enterprise versus a organic network that has been created for the good of the citizens that participate. I just cannot believe that this is actually happening, quite frankly. To me, from a technical perspective, it's just this massive question mark, and it begs the question, number one, we're moving away from regulatory certainty. Why do I say that? Well, I say that because the SEC won't decide whether ETH is not a security or not, number one. And the new moving from proof of work to proof of stake puts them back into the time frame whereby which they can be pursued as a security again. So this big Pandora's box is still left out there that hadn't been opened. And if it gets opened and you have ETH ETFs in place, what do you do then? It's crazy to me.
You're right. It is a Pandora's box. It's the reason why on Twitter and other places, they're like, well, what's next? Solana's next. XRP is next. And it sounds absurd, but the actual argument behind it that you just made is a sound argument. If they're going to allow Ethereum, and everybody, for years and years and years that were, sort of anti XRP because the way they've handled, distribution and the sales of their tokens to, for all intents and purposes, to line executive pockets. That's not a different mechanism in any meaningful way than handing out percentages of Ethereum at different times to the folks that were, part of, for all intents and purposes, the founding process, right? Same thing, same process. So the idea that, XRP would have an ETF sounds insane. But fundamentally, what you just said, Tillman, is true. Now, to be fair, it's not as if the SEC or the markets are entirely rational all the time, right? So right. There are ETFs out there that are just wackadoodle stuff, right? Like Van Eck came out with one associated with Dave Portnoy like 2 years ago that had to do with social media trends.
Yep.
What in the world is that? Right? Mm-hmm. Like now, for all intents and purposes, probably by the rules and laws associated, it's probably got stocks in there that are associated with social media, firms or whatever. But still, it sounds absurd on its face, which is where we're at here. So yeah, I also probably would add, based on Tillman's commentary, there is a gap between 19B4 approvals and S1 approvals. That still exists, right? We have not crossed the Rubicon of listing the Ethereum ETFs. I got a note today from somebody that has said that for all intents and purposes, the commentary from a regulatory standpoint and the scuttlebutt is that this is a tactical retreat by the SEC and the administration. This isn't a surrender, right? These folks, when you're a regulatory body, you're not really beholden to anything or anybody, right? You're not elected. Exactly. You can do whatever you think that you want to do, and the repercussions, other than getting fired, which rarely happens, there is no recourse. You do what you want to do, right? So. Yeah, it's gonna be an interesting few weeks,
Yeah, and I was, of course, I think we all follow Eric Balcones over there, that senior ETF analyst over at Bloomberg.
Yeah,
and he mentioned that usually, you're looking at probably about 5 months out or whatever for an S1 approval after the 19B4. But he's thinking, hey, because it's crypto, and because Bitcoin, I think was around 2 weeks after they only had one round of comments, and it took about 2 weeks to approve it. So he's thinking potentially, and it's a guess, but he's thinking like, maybe mid-June for approval.
Yeah.
I don't know. I think it's kind of interesting. I think what this whole thing really gives us is this really this look into just how much politics actually plays a part in this agency decisions. Because I don't believe we would have had that flip there on Monday if there wasn't a presidential election coming up, later this year. I don't think I really don't. I think that's all part of it. Because Warren and Gensler and everybody, this whole anti-crypto thing has been very, very vocal. Biden's been very vocal about if you do this, I'm going to veto or whatever. And then Trump comes out and he's like, hey, welcome to I'm your savior, and
it's a very simple narrative that they can spin now from, we're talking about elections, we're talking about, conversations and sound bites, right? Oh, you're anti-crypto. Well, what do you mean we're anti-crypto? We approve the Bitcoin ETFs and Ethereum ETFs. Like that, I don't understand what we're anti-crypto. That doesn't, and 90% of people will believe that response because they don't live in our, crypto Twitter world. They just don't, because it's a reasonable response. Oh, there's crypto ETFs, Bitcoin and Ethereum. Oh, okay. Well, what do you mean you're anti-crypto, right? So therein is the is the play, right?
Yeah.
I think that I've submitted this before as kind of a shift in mindset that we need to all have. If you've been in crypto for a long time, I've been in it for a decade. It feels like a very, very long time in a mature market to us, but it's really just it's not in the mainstream, right? It's the mainstream to us. Yeah. And then so we've had this shift in where now we've got Larry Fink at the helm of this new boat, right? And that new boat just set sail. It hasn't even it hasn't even left the port. We can all see it. It's beautiful that it's sailing and hasn't sunk in the port. But what's interesting to me is this evolution of education that you have to embark upon when you get bit by the blockchain bug. And so as much as this is going to sting all my fellow Bitcoin friends, blockchain is bigger than any of them. Mm-hmm. Right? So blockchain is a disruptive, decentralized ledger technology, and it can pop up in any form or fashion that the human mind has the intellect to dream up. It has infinite functionality across infinite markets, right? It's the most disruptive technology that we've ever seen in our lifetime by a long shot, right? Mm-hmm. More disruptive than anything, because it takes banking and transactions peer-to-peer at a global level, and that's never been done before. That's very unique, right? So you look at, okay, Bitcoin was the first. Well, Bitcoin, because it was the first, and because of the way it was launched, proof of work, and because it stood the test of time through 90% of its distribution, right? That was fairly inequitably done. Because of all these things that Bitcoin possesses, I believe that the world has deemed it to be a store of value. It has proven that over a power law curve that makes you feel pretty confident that it's going to continue until proven otherwise. That's really where Bitcoin, to me, finds its highest and best use. Now, can I say that for certain demographics that there's a higher and better use? Yes, I can. If you live in Africa and you have to transfer peer-to-peer because there's no central network based upon how rural you live, this could be the difference between you being in business and not being in business. For you, absolutely, it's a means for transfer, peer-to-peer cash, whatever you want to call it. But for Larry Fink, he's not looking at it like that. He's not ever thinking to himself, you know what, I can't wait for the day I buy my Coke in Bitcoin. He doesn't care. He looks at it as a financial instrument, a hedge against time, a hedge against volatility of other markets, just another stable market whereby which analysis can be done against other markets and provide hedging against those other markets' volatility. That's the way I think he's looking at it. So if you take a step back and you go, okay, where is Larry Fink compared to where we were in our educational process, right? So I remember when I went from Bitcoin to Ethereum and I started using Ethereum and I was like, this is incredible. This is going to change the whole world. Why? Because it did things different than Bitcoin, right? It wasn't the same thing. So what I have a problem with is that there's this notion that the brand of each individual coin that launched is why we should be supporting it. No, the functionality behind the brand is why we should be supporting each individual project. And so if you have, in my experience, you have to slow way down and assume that you know nothing, because in the world of blockchain, we all know nothing. We all can see tiny fragments of a shattered mirror, but no one's getting a clear picture because there's too much information to know, and it's accelerating at a pace that no human being can absorb. So you say, okay, what can we identify? What can we actually say, this is something that's worth building on. It's been proven and tried and true that it's the best one that is available for us to use. Bitcoin would be the only one, in my opinion. Why? Because to organically distribute another 20 million coins through proof of work will take another 15 years. So at the very minimum, you have a fairly distributed cryptocurrency that's globally supported by a ton of hash power that you has a 15-year advantage on the next competitor. That's the way I look at it, right? So from a store value category perspective, check, we've got one. The next box that everyone wants to check, because Larry Fink's even talked about this, which is like, we want to smart tokenize everything. We want everything to be tokenized. Well, that's going to require a backbone like Ethereum. But the question is not being asked, why Ethereum? If Ethereum doesn't have any differentiators that separate it from Cardano, XRP, all the rest of the ones that make the same claims that they're a better version of transactional Bitcoin, if you can't separate them from a legal perspective on how they were distributed, they all have to be ruled on in the same manner. So I don't think we're even close to checking that second box. Like, I think we're a decade away from checking it. If you're going to tokenize assets and put them on a smart contract, it sure as heck can't have the volatility of transactional throughput and fees like Ethereum does. And you sure as heck can't have that central power in the hands of the people who have the most to gain from it. That doesn't work. That power imbalance won't allow it to scale, in my opinion.
I agree there. I think the best thing of what you just said there was, you're looking like at least a decade off. And again, if we're in, a lot of times we're in crypto, right? And when you get in there, especially if you're on X or Twitter or whatever, you get sucked into the rabbit hole, right? You're there. Everything is just a sounding board. It's all funneled right in there. And a lot of times we have trouble kind of removing ourselves and stepping out and going, okay, well, maybe things aren't quite like what we think they are, because we're getting hit by it all the time. And so I think for a lot of people, if you're in here, especially looking for, what's going to be, like with blockchain, with crypto, with Bitcoin, whatever, I really think you have to have that much longer time frame in there. Again, so much has happened just in the 15 years that Bitcoin's been. But at the end of the day, we're really just getting started.
Yeah.
And so I think there's a lot of potential, a lot of possibilities. The other thing I like what you were talking about was this idea that, the shattered mirror, the shattered glass or whatever, and just kind of seeing bits and pieces and this and that. And I think that's great when it comes out with new technology, because, a lot of times technology comes out and says, this is what it is.
Yep.
And then as people start using it, they go, oh, but it can be this now. It can also do this. It can do these things. And, it takes a few iterations of pushing and pushing. until you're really kind of coming up to something that goes, wow. And a lot of times it may not even be what was even envisioned in the beginning, right?
Well,
I think
or you get to a place where it's the wow moments there, but it's still so user unfriendly that you have to start that whole process over. It's like, how do we make it to where everybody will actually use this? Because it's incredible.
Well, I'm old enough to, as a certified Gen Xer, to remember using the internet in 1995, right? In the beginnings of email in 1995, right?
AOL.
and so let's use the 15-year analogy. So 15 years from 1995, it's 2010. How much has the internet changed in the next 15 years from 2010 till now? And how often and how annoyed are you when you even have to use email now? Right? It's not the preferred, way to communicate with people. So there's no doubt that there's going to be, the most effective and most used potential blockchain with the tokenizing of real world assets. It may not exist right now.
Correct.
That's a possibility, right? So, we're going to go.
Or it may be forced upon us that it's a CBDC. Controlling and distributing currency. Like this is something that I disagree with a lot of Bitcoiners about. So let me put it on record that I don't mean to tick anybody off here, but there is something to be said for you being able to control certain aspects of the economy to inspire growth. And it is incredibly useful and has proven to be useful for the entire world. That growth and that capitalistic desire to innovate has created innovation, and it's changed the scape of the earth. If you don't have fiat, you can't do that. And if you had every single currency as a store of value, you wouldn't have the ability to inflate your currency. And that's not a bad thing. It's when it becomes abused. Everything in balance typically works for a very long time. It's when it becomes out of balance. And so, yes, Bitcoin does possess this deflationary quality to it that's awesome. But that, in my opinion, by definition, disqualifies it as a peer-to-peer cash system, because I don't think that those two things are supposed to exist together. I think peer-to-peer cash should be an inflationary asset, and it should be inflationary based upon what's best for the world, like how much currency needs to be put into supply to cause innovation to take place. And I know there's a lot of economics majors out there that are arguing with me behind this, but the truth of what I've seen in my lifetime is that I am an entrepreneur. I chase those carrots. I like innovating at a high level, so therefore you get compensated at a high level. That doesn't exist without inflationary currency. That doesn't exist without the system that we currently have. The question becomes is what types of checks and balances do you put in place, and have those checks and balances failed, right? If they failed their duty. And if you were able to keep the checks and balances in place and keep them, manning their posts, then it would last an incredibly long time, and it would be for the betterment of everyone versus a limited supply, scarce commodity driving all of our monetary policy. That doesn't seem doesn't seem optimal to me.
Yeah, I definitely think you're gonna get hate mail. They might not like us on here anymore, guys. but it's all right though, right? The whole thing is, if everybody was to agree on everything all the time, there wouldn't be any innovation. Right. There would be a lot of wrong things that would happen, right?
I would love for someone to convince me that cash is not the best layer 2. Show me a layer 2 that's better than cash. You know what I'm saying?
So far it doesn't exist, and oftentimes I I have to put on a theoretical muzzle when Tillman doesn't bow at the Bitcoin altar, but at the same time he speaks truth, and there is no perfection, right? Like, we all want to think that Bitcoin is this perfect asset, but it's not, and at minimum it's not, because of its properties. Why would you want to spend it? Why wouldn't you want to hold it and keep it as a store of value for as long as you possibly can, right? That's a property of the asset itself that is absolutely fantastic, but also at the same time is a little bit problematic, right? That's just truth, right? There's a quote about truth, that people really don't like truth in the same way that they hate poetry. So I won't say the actual quote because it has an expletive in it, but people oftentimes, are you can be an absolutist almost about Bitcoin, as it stands as an asset, the properties, and the case that it makes to own it, and to own a lot of it, are almost indisputable. At the same time, the idea of letting go of that asset, that's a difficult hill to be able to climb over, which again gives it a bit of a weakness, right? For all of its strengths, that does.
Well, it gives it a weakness against other use cases. It's like, listen, if I was describing my wife to you, my wife is the greatest woman I've ever met. I married her and got her with a ring on her finger as quickly as I could. We dated since we were in junior high. She's my one and only. But if I described her to you as great as she is in my head, and I said to you, she's perfect. She is a 5-star chef. She's great looking. She's an incredible singer. She's the best mother in the world. She has no deficiencies at all. There is no weaknesses. It would diminish, in my opinion, your view of her, because it's calling into question whether I see reality for what it really is. And I think the same thing happens with Bitcoin a lot of times. It's like, it can be the greatest store of value that mankind has ever created. And that's okay if that's all it is. I'm not saying that's all that it is, but let's just hypothetically say that that is the case. Well, just like Andrew said, there's a case to be made for every human on earth to have it in their portfolio at some level. There's a case to be made for it being the greatest store of value that has been created from the people that have ever been created. There's all these incredible attributes, but it doesn't mean that I have to start lying to you and going, yeah, and it's also a great singer. And then you hear it and it's tone deaf. And you're like, I wonder if these people are kind of crazy or not. You know what I mean? Like...
Yeah, no, but that's exactly right. Again, I think just as human beings, we tend to, exactly as you said, we have an opinion of a thing that often is, how do I best say this? Where we kind of really just see all the best or all the worst in it.
Yeah.
Just in life, everything for the most part is not usually to the extremes. We tend to work to the extremes. And actually, it's just pretty good thing that we're talking about here, because Joe, oh gosh, I'm going to mess up his name. Casolari. Oh my gosh.
Yeah.
But he had,
I know who you're talking about.
Yeah, he had posted a tweet the other day that said, what if things don't implode or whatever in the next few years? What if things just continue to move on? Because everybody's been look at the last few years, everybody's been very much, it's the end of the world. Stocks are going to crash, recession, and all this. We're not seeing that yet, but they've been doing this for years, right? And he's like, well, what if we don't? And that kind of brought me up to a thought, which is, again, as far as human beings, we tend to go to extremes. We
Chris,
tend
we all have biases,
Chris,
right?
let me give you my analogy, because I'll bring in something that most people don't think about as it pertains to monetary policy. Let's say I've got a certain money. It's called the Tillman money. And you and Andrew have to take it because I've been forcing you to take it your whole life. And I am 6'9", 395 pounds of solid muscle, and I've beat everyone in the UFC ring, and you guys both know it. And I show up at your merchant's door every week and I go, "Are you using my money?" And I find out you're not using my money. What incentives do you have to start using my money and play ball again? It's not a monetary incentive. I'll give you a clue. It's a you better get back in line clue. And listen, we're a long way from losing our potency on being the 6'9", 390-pound giant. We are that. And the markets can stay irrational way longer than any human being can stay solvent. And so we're looking at it within the lens of our lifetimes, within these tiny little sections. But the thing that I don't like, and I feel preyed upon in this regard, I just hear soundbite after soundbite on every level. Everyone's grasping to use it for the biggest leverage and pry bar they can for their own purposes. And it builds this hyper adrenalized environment instead of just like taking a step back and looking at the progress that we've made as an industry, accepting Bitcoin for what it is. Stop trying to put runes on. I mean, we're just ruining everything, in my opinion. It's like, it's like music. Why can't anybody just play instruments anymore?
Well, it's the Bitcoin story. At some point, you've got to try not to be happier than happy, right? Bitcoin is the brand, right? Bitcoin has an ETF, which as an asset class, the Bitcoin ETFs are the most successful ETF launch in the history of mankind.
Yeah,
right?
so like over 13 billion right now, right?
Yeah. So BlackRock's ETF is their most successful ETF launch in the history of their company. BlackRock is the largest asset manager on the planet. Bring those two realities together, and Bitcoin is a flagship for them now.
Yeah.
Don't get happier than happy. So yeah, there's if you don't mind, Chris, I wanted to give you personally a shout out here on your channel, and talk about some of the things that you do, and if you don't mind, talk about a little bit about Tillman and I's company. But Chris is about as good as there is in terms of being a trader, understanding day-to-day movements in the markets, and being somebody that really leans in and provides enormous value from an educational standpoint. So I wanted to give him some kudos. We're here talking about the crypto markets, but Chris is about as good as it is when it comes to trading education. And everybody that's watching, I wanted you guys to have a secondary endorsement from somebody.
Well, I started following you because you had Texas in your name, but then I stayed because of your trading information for sure. It is good stuff.
Well, I appreciate that, guys. Again, the goal is, actually, I've got a company. Obviously, we train people how to trade properly.
Yeah.
And not even just how to use the tools, but really how to approach the market. How to understand the markets. But at the end of the day, most of the people that follow me don't join, and that's fine.
Yeah.
I think it would behoove them to do so. Obviously,
Right.
I put a lot of effort in what we do, but my goal is always, whether you follow me on, Twitter or on YouTube or wherever else, the goal is to I take that seriously. I say, if you're here, you're looking for actionable, real information, real understanding, and I'm going to do my best to help that happen. So I think maybe that's probably the good thing there.
You provide a service, and people can be involved or not be involved. And it's, I don't know if you know what Tillman and I do, Chris, but we have a company, thearchpublic.com, and we create and have now for 4 years algorithmic strategies that people can take what they learn from you. They can then apply it, and then they can grab one of our strategies and turn on the switch and then watch it do the things that you teach people, right? So it's taking the applied learnings of how to trade and then allowing an algorithm or / a robot to do it for you.
Well, and no one can argue that a strategy should you should come up with a strategy before you're in the trade. right? You should not be coming up with the strategy as you're in the
Mid-move,
trade.
right?
Yeah, and I'm guilty as anybody about breaking my rules and playing it on my feel and gut instinct. And I've been a trader my whole life, and so the start of our thesis was like, how could we, at the very minimum, just put handcuffs on ourselves to not act emotionally inside of trades, right?
Yeah.
And so the premise behind automation is like, let's write the rules before you're in the trade of exactly what your risk tolerance is, exactly what your profit targets are, exactly what your risk reward ratio is for the day. Let's come up with that beforehand. Let's program it in, and then let's let the computer do the work, because it doesn't care. It just executes when the math is at its
Well,
targets.
and you teach this stuff, Chris. It's the reality of, you can have the rules that you're walking out from an educational standpoint, but the biggest player here is your emotions.
Yep.
How do you manage your emotions?
100%.
Yeah, and I've seen you talk about that time and time again. And so for us, we for 4 years now built out strategies where it's specific about removing those emotions. Now, that doesn't mean that we don't have customers that sit in front of their computer watching the algorithms do their work, and now their emotions are part of the algorithmic process. They're like, wait a minute, I'm up $1,000. Click, I want that, right? And they miss out on another 2,500, right?
Yeah.
So, you can't completely lobotomize people, no matter what product you give them. But just wanted to give a shout out that you do great work, and we appreciate you.
And what's that website so people can check it out, man?
It's thearchpublic.com, thearchpublic.com. And love to have people on board. We've got an entry-level product that's $99 a month, and it's completely hands-free. You don't have to go through 15 steps to figure it out and download this, download that. It's a 1, 2, 3 process, and you're good to go.
I love that. I'm gonna have to go check that out, man. So it's The Arch Public, guys. So TheArchPublic.com, in case I've got an accent and you can't understand what I'm saying, or maybe Andrew
Listen,
is.
for being from West Texas, my dad's from Odessa, and you sound like prim and proper. Sometimes if you go back to Nocona, Texas, you can't even understand some of the folks that live around there. So.
It can get crazy somewhere sometimes, right?
Yeah, exactly.
Yeah.
But anyway, well, listen, guys, I appreciate you guys being on, and I appreciate you guys staying longer than what we initially,
absolutely,
we're going to do there. I think everybody loves hearing from you guys. There's just so much information there. I'm serious about beards and Bitcoin. I'm going to have to talk to you guys. Man, maybe we start a weekly show, guys. We just talk about Bitcoin,
it's
and
it's fun. Let's
kind of just put out all this information. Again, all about miners and what's going on with the institutions and what's going on with the charts. And man, I think it's an awesome three-pronged attack on what's going on with Bitcoin for these guys.
Yeah, so, it's going to be the amount of information that will continue to circle and play around with markets. It's going to continue for the next 2 to 4 weeks. No question about it.
Yeah. Awesome. Well, man, I always appreciate you guys coming on here. Thank you so much. I know it was a last-minute invite. Again, that was on me. Yeah. I was supposed to send that out a few weeks ago, and for those of you all wondering, I talked to Andrew yesterday about it, yesterday evening. I was like, this was supposed to go out for you guys for tomorrow. I understand if you can't be here, but
the continued negligence. Andrew didn't talk to me about it until 5 minutes before we got on. So
it was a flow. It was a flow of negligence. Yeah.
It all worked, and everybody listening, I believe, is better off for it. So I appreciate you guys. Hey, listen, you can follow Andrew at AP_Abacus, ABACUS. And I keep screwing up Tillman's, man. I've got it right the one time on here, and I keep screwing it up. But it's at Texas OL 61. God damn.
Yeah, OL. Listen, that was my original email when I graduated from college. I was an offensive lineman, and I just went with the simplest thing I could remember. So it's Texas offensive lineman, and 61 was my number. So it's
easy for you. It's difficult for the rest of us.
That's right. I didn't have much forethought in that.
Well, hey, man, I appreciate you guys so much. Everybody enjoying it. They're loving the discussion here. Listen, you guys, you may have heard the inception of a new show. So I'm looking to do
Awesome.
that. So I'm going to get with these guys and see if we can hammer something out. And I, again, think that you guys will all be better off for it. So make sure you're following all of us, guys. Check it out. Lots of good information, lots of good thoughts. Even Tillman and his Bitcoin above all else. I think that's going to resonate with most of y'all anyway, right? But anyway, all right, guys. Hey, listen, I appreciate you. Thank you so much. You guys have a great weekend. Be safe. America, don't lose no fingers, all right?
Thanks,
Chris.
Chris.
Have a good one.
All right, take care. All right. Gosh, that was fun, man. I enjoyed that. I enjoyed the conversation with those guys. You guys, let me know. Leave a comment under here, whether you're on X or YouTube or wherever you're watching, Twitch, whatever. Leave a comment. Let me know what you think. Would you be interested in that? We do a Bitcoin-related show every week, talk about news, charts, things that are going on. Again, remember, my background is trading, charts, even macroeconomics. Andrew has a background in institutions. That was where he came from, big institutions. And then, of course, Tillman has, a big background there in Bitcoin mining and whatnot, coming through that. So I think it's amazing, kind of three-prong look at Bitcoin market every week. Yeah, beards and Bitcoin. I think that's what we're going to call it if we do it. But we'll see. We'll see how. We'll see if we can come up with something there, guys. So let me know what you think. Let's jump in here. Let me pull up a chart. Hey, there we go. Oh, let me get this lower here. Where is it? That's better. Add beer in there too. Beer, beards, and Bitcoin. I don't drink anymore. Would have been fun, a decade and a half ago, maybe. Anyway, the 3 Bs, right? All right, guys, listen. Nothing's really changed with what we've been looking at here, right? Again, I've been talking about this for a while, okay? And nothing, it's just kind of playing exactly what we're looking at, right? So we've got our range. We've got the spring here. We had the test or the last point of support coming in, much lower volume than what we had there, which is what we looked for. Higher low, lower volume, rally back up, came down on even lower volume again. Just no desire to sell here. Another move up. And even coming back here, the volume is still staying relatively low. A little bit more than the last one here, but it's a bigger pullback, right? Now, it stopped a bit above where I was looking for it to get here. But to me, this looks like right here, a 1-2 and possibly a 1-2 interior here. And so if we're looking at this, what that means is this pullback here was almost 50%. As you can see that right there, right? So almost 50%. We've got this here. So we're looking for, this continued rally here. Let me see if I can find above this. Yeah, because it looks like a WXY. It looks like ABC. So you want to break out. This is the Bitcoin all-time history index chart here, okay? It's not a specific exchange chart. So wherever your exchange is, this swing high right here on this chart, this is actually, what is this? 70,642.80. 642.80, I believe is what I said, right? All right. That's what I'm looking for, guys. That's the breakout I'm looking for, okay? If we can get that breakout, then according to this being a 1-2, 1-2 here, things really get interesting. Now, as we look here, that'll give us a minimum wave 3 target up here at 88,740 right there, right? Which means then we get, minimum expected wave 4 right there at 79,436 or so. Wave 5 up here at 95,000 area. That then becomes this larger degree wave 3. So right now that's what I'm looking for. And you go, oh man, I don't know, that's so big. But remember, there is 10 billion plus in shorts sitting right here at the all-time high. And so again, if we hit that, we were talking about that big short squeeze that could happen, right? And so again, hitting that area should thrust us into the 80s. So, again, it gives us wave 3 of 3. In terms of this range here, if you're thinking Wyckoff, right? So you end up having your spring down here. You get your show of strength up here. You get your last point of support. This breakout above this resistance here, right? This resistance here. This is what we call the creek. And all that is a funny little name for supply, okay? It's resistance. And so the jump across the creek is the breakout through that supply, through that resistance. And it should be large candle spread, large spike of volume as you're getting through there. So again, when we think about what we would normally expect in this reaccumulation range and the breakout anyway, and then we put on top of that, oh, by the way, we've got a record amount of shorts here, giving us a potentially a big short squeeze into the 80s, right? I mean, it all aligns. It all seems to line up there. And so, again, my bigger count kind of gets us potentially up there to, 245,000. So that's kind of where I'm looking. I've got and I think a lot is going to be whether we get, the top toward the end of this year, end of Q3, maybe Q4, or if we get some kind of, what they call like a double pump, right? Like we had in 2012 to 2013, where you had a top and a pullback, and then you had another top much higher up. I'm still leaning toward maybe we get that. And that would get us up there likely to that 245,000 or even higher. But it really kind of depends. I want to see what happens here with the squeeze. What happens, do we get the squeeze? If we get the squeeze, how does that play out? Does that get us up to, 105,000, 104,000 maybe, from here? And then we get the pullback and then we continue on. So, my count says, up there around 245 or so, but locally we want to make sure things are happening to continue that up as it's going, right? We don't just want to blindly say 245 and that's it. So this is kind of where I'm looking at this. Josh says, I'm curious about the larger macro count for Bitcoin. So kind of talked about it there real quick. Back in 2021, I remember you suggesting the two tops could be a leading diagonal. How did you end up analyzing that top and the drawdown and considering where we are now? Okay, yeah. So basically, the two tops you're talking about there was basically the double top there. So I've got that. The first top is 3. The pullback was A. The rally up to the slightly higher secondary top there around 69,000 was B. And then C coming back. So it was I've got that as a wave 4. So this is all part of wave 5 heading up. Yeah. And so based on the height of that wave 4, we should be looking just based on the height of that, which is generally how we get our wave 5 targets. I think we should be looking at 175, I think. Let me zoom out here a little bit. Yeah, so the idea is this was 3. A, B, C is a flat. And then if we kind of measure that out, yeah, 173, 174,000 would give us a general wave 5 target. Now, obviously, when you're building wave 5, that can overextend or it doesn't have to hit it. But it gives us a place to start when we're generally looking at, okay, where might wave 5 be going to? So, I've looked at a couple of different ways. I've got that target, right? I have the potential, 245 plus target, but I also have this R5 pivot here on the weekly, right? And so that's up here at around 116, 117,000. Why would this be any kind of target? Because something I've taught you guys so many times on here. Nobody has ever discussed this that I've ever seen, but I traded pivots for just a couple of years and I learned a whole bunch about it. And so generally speaking, when you have this move in sideways between your pivot and your R1 and price does not come back to the pivot, instead it rallies up impulsively through the R2 toward the R3, right? This is a very hyper aggressive move. And most of the time, this is going to give you the R5 pivot or higher. So if we strip everything else out of it, that particular price action setup suggests at least this $116,000, $117,000 target area, at least. Again, the one thing you guys need to understand is that there are no guarantees in trading, right? Nothing is 100%. But many, many, many more times than not, that is what happens here. So generally speaking, my targets are that 116, 117 there, and then based off the height of the wave 4 here, 173, 174, and then based off a potential count up there around 245 and potentially even higher. It depends on how the waves continue to work out as we go up here, if we're getting up there. So if you need general macro targets, that's where I would look, just to kind of begin with here, guys. Okay. So Andrew says we should see at least 12 months up of a bull run after the halving. History has shown us 3 times now with that time frame. Yeah. Until it does something different, we kind of continue looking at the same thing. Now, of course, what's happened this time that never happened before is we had a new all-time high prior to the halving. Does that affect things? Does it change things? We'll find out, right? But generally speaking, as traders, before we even dive into all the other stuff, we can just look and go, okay, what normally happens in this situation? And usually that's going to maybe not necessarily repeat, but it'll rhyme with that, right? History often rhymes. It doesn't usually repeat, but it often rhymes, okay? Which means it's often similar. So yeah, always keep those things in mind. If something has continually happened over and over again, odds are it's something similar is going to happen in the future until it doesn't anymore, right? So you definitely want to, you want to watch that as you're looking there. But yeah, for me, again, 3 up here, A, B, C gives us 4, looking for 5 up. So things could become kind of interesting here. A lot of potential, again, with the short sitting up here, a lot of potential strong movement higher. I've had people say, oh, no, it's always distribution at a new all-time high, right? And it isn't. Right here in 2020, we had this sideways going on right here. Now, it was a few weeks, right? Rather than, maybe 2 months. But it was right there at the all-time high. We consolidated reaccumulation before breaking out higher, right? Where else do we have it here? Right here, we have this bit of range right here before breaking out higher. This one we just shot right up through it. Again. Here's that double pump I was talking about. I think it's very much possible we could get something like this, where you get your first top, you pull back, and then you get another top higher. I think that's very much a possibility right now. I'm not guaranteeing it's going to happen, guys. I'm very much open to the possibility that we just get 116 or we just get maybe 173. But until we see some real rejection for those areas and counts kind of align with the top likely being in, I'm going to keep looking higher because it doesn't make any sense not to, right? So that's kind of what I'm continuing to look at here. By the way, you'll notice on the weekly here, you can see that we are we bottomed out and oversold here on the Stochk RSI. We crossed bullishly and we're threatening to break out of oversold. RSI remains bullish above neutral, well above neutral, threatening to break into overbought and cross bullishly itself. So, things are really looking pretty bullish for Bitcoin in this area here. And so we just need to kind of get some follow through and move higher on that. But locally, it does look to me like we've got this here as a 1-2, potentially a 1-2 here. And we just want that breakout above that's 70,642.80 cents on this particular chart. If we can get that. Yeah. Now, if we do happen to break down below this swing low here instead of that, I'm still looking for this yellow box. Basically, that's 64 to 65.5 thousand. It's basically, the 50% to the 61.8 kind of retracement area. It keeps you above the daily pivot. But ultimately, I don't think that Bitcoin is anywhere near done at the moment here. Okay. So that's what I'm still looking at. We did break again. I told you guys, we were looking for the impulsive breakout above this level here, which we got. Big, large candle, spike of volume. That's what we needed. And then we got, the breakout through the initial swing high here, 65,541. And then we had this local bearish market structure with the high, the low, lower high, lower low, lower high, lower low. Breaking out above that last lower high breaks that bearish market structure here. breaking out through this swing high here is going to confirm that that is definitely done. And we're most likely looking at continuing higher and higher off that. So that's where I am with that. Since we're talking about Ethereum, let's jump on there real quick. So Ethereum, those of you who've been watching me, you know I've got this 51.85 kind of initial target here. Let's kind of zoom out a little bit. So I've got this as a 3 and a 4 here. So again, 1, 1, 2. And then this is wave 3 in progress, I believe, from what we got. This is clearly a wave 3. Large candle spreads, large spike of volume. And so you can see here we pulled back. Let me see if I can get this here. If we look here, wave 2, we got a pullback between the 38.2 and the 50% on this big wick. That was yesterday on the ETF approval thing. You had the drop down, then you had the rally up, and then it closed back down here a little bit on the 4-hour, but on the daily, it turned into a pretty good candle, a pretty good little doji candle there. So we're looking for some follow through higher. Locally, that gives me a wave 5 of 3 target up here, minimally at 42.27. And that will give us minimally a wave 5 up here at 46.36. But again, still looking up here toward 51.85 and then 63.50. Those are still my targets. Those will take an all-time highs once we get up there. Okay. So Ethereum, and obviously if we lose the swing low here, well, that invalidates it. At that point, we got some large fair value gaps here. I would look initially at this low volume node right around 34.69 or so. But thinking if we do break down through that, we're probably coming on down here toward 31.50, 3200 area. If we were to break down below wave 4 here, but if we can just kind of rally on up through there, we should be good to go up toward that 42.27 kind of target area. Also, Nvidia, guys, you guys heard about Nvidia, right? Smashed earnings, double beat earnings and revenue. Mentioned, they said they're going to do a 10-for-1 stock split on June 7th. So if you're holding Nvidia, good for you, man. Hopefully you guys made some money. But I've been talking for a while about 1,000 plus. We're looking at around $1,138 for a target still right now. As you can see, we had our resistance here, and then of course that gap up on the earnings here. There's your earnings. Let's see if it pops up here for me. There we go. Yeah, estimated to be 560, came out to 612. Revenue estimated to be 24.593, came out at 26.044. So, did a whole lot, had good forward guidance. Just did what it needed to do, guys. I'm not sure if it continues being quite so impressive. This may or may not be the last time that we kind of get such great numbers. But man, oh man, what a job it's done. I do think we continue up through $1,100. Continue up through their weekly pivot. Again, see, we're moving sideways between the pivot and the R1. Moved up aggressively into the R3, pull back to the R2. I would not be surprised at all if we hit 1465.5 up here at the R5 on the weekly. Same reasoning I gave you for Bitcoin. Everything else aside, this particular price action pattern usually results in that move, at least up there. You can see that the Stoke RSI here reset into oversold, broke out, crossed bullishly, heading up. And of course, you can see that RSI itself remains bullish above neutral, broke back into overbought, threatening to cross bullishly through the SMA there. So again, I do think we continue up higher with all that toward, again, locally 1138, but I really think we get up here probably 1465.5, maybe 1500 up there. Nothing different than I haven't already talked about, guys. So I like seeing things come through, as I expect them to. That's always a great thing, right? Let me see here. Bitcoin dominance. Let me pull this up real quick. So Bitcoin dominance. I think I had to adjust this count for our members today. This is we update this daily, guys, at Texas West Capital. And so I've updated this recently. I thought I had a 4 down here, but this count makes no sense up here. So it looks like it's 3 down, 3 up, 3 down, 3 up, 3 down, triangle for wave 4. So as long as we break out above 56.13, that should give us a wave 3 of wave circle 5. Target up there at 60.41%. And that, of course, that's minimum expected wave 3. That makes a lot of sense when you think about if we're going to get that type of breakout and suck all that money into Bitcoin on a short squeeze, it makes sense. We're going to kind of take off, right? So I've got minimum expected 60.41, secondary at 62.8, third target up there at 64.88. What are they? The initial target is the 1.618 general target that we look for from wave 1. The 62.08%, the secondary target, is the 200%, which we generally look at as a secondary target on wave 3. And then the 2.618 is the extension here for the 64.88%. So I think that's what we do. We've got a good rally this morning, bullish engulfing. The volume's bigger. That's what you want to see, especially if you get a bullish engulfing. You want to see your volume up there bigger there. Looks good. Of course, it continue rallied up. Again, looking for a breakout above 56.13 to kind of confirm those higher targets. You can see here on the daily that Bitcoin dominance. Let me see if I can do this here. We've bottomed out and oversold here, crossing bullishly, heading up toward a breakout of overbought. RSI just dipping a little bit lower here, but rallying back up toward neutral. Cross there. Is that going to be? Yeah, it says swing low. Swing low. What's the swing low here? That might give us some hidden bullish divergence here. Let me see. That's 53.88. And this is 53.92. No, so it's lower, lower, and then lower, lower here. So no hidden bullish divergence there or anything like that. But still looks good right now. Pepe, let me see what we got in Pepe. I looked at that recently. Not sure when the last time I did was. No, it's weekly. Recently though. Pepe. What do we got here? Oh, breaking out above where I was looking at. So I was looking at this count here. Let me see. What do we got here? We may be topping out. Let me see here. 1, 2, 3, 4, 5 maybe. Let me zoom in a bit. One, 2, 3, 4, 5. Well, 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5. Yeah, it looks like A, B, C down here. 1, 2, 3, 4, 5. A, B, 1, 2, 2, 3, 4, 5 maybe. 2, 3. So this would be 1, 2, 3. Nope. Let me see here. Well, actually, yeah, that could potentially be 1, 2, 3, 4, 5. And then that could be 1, 2, 3, 4. Jesus, freaking A. What is going on here? Let me zoom out a bit. Let me see. There's a lot of overlap here. Yeah, so this looks like a 1, 2, 3, 4, 1, 2, 3, 4. Yeah, I would look probably up here. If we don't get rejected right around where we're at here, we'll just do it the easy way here. If we're not getting rejected right where we're at, if we break out higher, I would be looking at 17,520 initially. But if we do drop on down below 12,552 here, let me see. Yeah, if we're breaking down below 12,525, I think that might say that that's done there. Wave one will be done. And we'll look for a pullback toward I'm trying to see this 50% here. Comes out right there about 78.55. Yeah. If we can get rejected and drop down through that swing low, I think we'll probably be looking down there. You can probably also, let's see how this looks. Yeah. So we've got a nice, not really a nice channel. At first it was there, but then it broke back down through here. So I guess we'll have to look at more like this. So yeah, that move up there to 17,520 could get us right here around the top of the, or peaking out just above to a throw over and then come back down. But again, if we do break down below that 12,525, I think that's the first, signal that the top may be in there. We're headed down here toward a minimum of 78.55. Following through that, we'd also look at 66.64 and then 59.03 if we get that breakdown. But again, if we do break up, 17,520 would be my next target on that. All right. What's up, Leonard? What's up, man? He says ETFs announcing the announcement. You talking about the what you call it? The ones that were just approved, the 19B4. Yeah. Again, as we talked, as I mentioned earlier, the 19B4 is what's filed to give for the SEC to allow the self-regulatory agencies to approve their rule change. And so that in this case, again, you'd be looking at New York Stock Exchange and NASDAQ. So basically the 19B4 form approval that we got yesterday basically says, okay, well, the New York Stock Exchange and the NASDAQ can now list the Ethereum ETFs if they get approved. And I say it like that because what you're waiting for now are the S1 registrations, which are the actual ETFs themselves, the companies with the actual ETFs themselves. They have to get those approved. Those generally, on average, take about 5 months. But again, Eric Balkunis there was saying that he believes that you could potentially see it about mid-June. He bases that on, this whole acceleration of the 19B4. And then, of course, with Bitcoin, when they went through theirs, they only had one comment period and it took about 2 weeks and then they were approved and they started trading. So he says based on that, it's possible we could see it mid-June, but it could be months before the actual ETFs themselves find approval. So just something for you guys to remember that, okay? Let me see here. What we got here real quick? Let's check on gold and silver. Let's see what we got going on there real quick. Come on. You can do it. All right. So gold, man, gold just had this beautiful move up and out through it, right? We've got nice big candlesticks here on the weekly, which is what you want to see. Very little. I mean, all we did, and you guys notice here, right? So again, you've got your reaccumulation range here. You've got your creep, which is this resistance I was explaining earlier, right? And then you get your big spike of volume, your big candlesticks as you start kind of breaking out through there and continuing up here, right? So this is your jump across the creek through that resistance. And what did we get? You got a breakout above it and then a retest of that previous swing high. A pull up, a pullback, and then the breakout again. And then what are we doing here? We're just kind of sideways right here at the moment, right? It looks like we made a slightly higher high there. 24.54.20. Yeah. So if I look at this, let me zoom in a little bit here. The daily is about reset down and oversold here. So we've got 1, 2, 3, 4, 5. It looks like 7 swings, which is just an ABC here. So we got an ABC as W. Let me see here. It looks like ABC is W, X, and then potentially ABC is a Y. So it looks like we got an ABC down, ABC up, which means we could see this pull down toward the swing low here at around 2285. We're looking for 5 waves down or a little bit lower to finish this off as a flat correction. You can notice that we're finding support on this first drawback right into this demand structure right here. Right? So right to the bottom of that and then took off, looking for this move down and then looking for a breakout higher. So let's say that wave A, that bottom there stays in. Minimally, based on the height of that pullback, 2564.30 looks like the target. But because this would be a flat, we need a breakout above wave B up here at 2454.20 to confirm that and give us that target up there. Now, again, we look for generally a flat. We generally look for it to come back to around where wave A starts. Usually it's a little bit before it. So I wouldn't be surprised to maybe see it also hit this ascending channel support area, potentially. You can see this is a low volume node. So again, with low volume nodes, you usually don't get drive through. You usually get, or if you do drive through it the first time right here, you'll come back and test that area, which is kind of what it's done right in these areas here. But overall, as long as we can get that rally back up and through that, we should be heading higher. Otherwise, you can look on down here. I would look on back down here toward this supply structure turned demand structure here, which we got that first bounce off. We broke up through it, came back, retested, took off. And so I'd be looking right here in this low volume node. So if we were to continue breaking on down through that and just kind of fall down through these candles, I think probably 2151 to about 2122, the upper half of this would be where I'd be looking for it to target. I think we continue up higher there. Again, we've already getting the reset on the daily here. But if we can't hold in this area, I think it falls on through down toward that lower area. And then I'd be looking for a long on that, guys. Could gold be a triangle here too? Yeah, it could potentially be a triangle. A, B. If it's a triangle, if it's what we usually look for, which is a consolidating triangle, right? A symmetrical triangle, then, this pullback has to remain above this swing low. The next rally up needs to stay below this swing high. So you get an A, B, C, D, E. Target will still be 2564.30. Okay, guys? Occasionally, you'll get an inverse symmetrical triangle or a megaphone pattern. And that's where your swing lows and swing highs get bigger. So you get something like A, B, C, D, E, and then you'd head up. And in that case, wherever the distance is between D and E, okay, wherever the distance is between, because that's going to be the widest part, you put your retracement tool at the swing low to the swing high. And in your retracement tool, you're not using the extension tool, you're using the retracement tool. Just make sure that your 1618 is checked there. And that'll give you that target up there, depending, again, however wide that gets. It's very rare that you get that. We don't get it often, but it does happen sometimes. But with this ascending channel support coming in here, yeah, I mean, a triangle being here, I think would work really great as well. Give you some more sideways maybe for the next week before you finally get a breakout. I think that's definitely a good possibility there as well on that. So, yeah. Greg, what's up? You said, wouldn't that indicate a continuation, but local high is there? Yeah, if you get a triangle, yeah. Your triangle, remember, guys, a proper triangle is how we learn it with Elliott wave, okay? It's 3 waves. It's all corrective. It's 5 waves, A, B, C, D, and E, okay? And each one of those, the interior count is 3 waves, okay? Now, occasionally wave C or wave E can be a triangle itself, but it's all corrective is what you're looking for. And what that tells you is that's the last reaccumulation, if you think in terms of Wyckoff, prior to the high of that trend, of that current 5-wave rally. So it'll be a wave 4, okay? If you're in that. Now, if you're in a correction, your triangle can be wave B. Again, it's your last, consolidation before your final move in the direction of that local trend. So if you've got A, B as a triangle, then C is your last move, right? If you got a WXY, X can be a triangle. So yeah, just something to think about. A lot of people, if you look at people that are just trying to, see, this is where I say the information is half truths and some are outright lies. A lot of the free stuff you guys get out there. If you look out there and you look up triangle, most people are going to say, oh, if it looks like a triangle, meaning if there's consolidation, right? And, it doesn't matter how many waves you got in there, whatever you're doing, right? All they're looking for is this consolidation, right? That's all they're looking for. But that's not, and then they go, okay, but it could break up or it could break down. If you learn to do it properly, as we learn it with Elliott Wave, it is a continuation pattern, and it's the last consolidation before the final move in that particular direction you're going at that time. So yeah, exactly, Greg. He says, I hope we get a good sharp correction in gold and silver to knock out some of the sentiment. Let me see here. So yeah, that's kind of what I'm looking there. Again, silver, everybody's like, oh, why is silver breaking out? Well, it's breaking out because, dude, it's basically been, it's had this swing high up here since August of 20 and a peak right there, February 21. And you had all these other little highs. I mean, it was all right there. It's been going sideways, basically right here, followed by right here. And so, yeah, and you kind of up through it. And so then it gets the big break, and it's a descending resistance. So you're going to get the big break and move up, No surprise about silver's big move for me anyway, right? But I've got a, what do I have here? Why do I have a triangle for a wave 2? That doesn't make any sense. Give me a moment here. Oh, I've got a triangle for wave X. Remember when I said that triangle could be wave X? I confused myself, but I got A, B, C for W, and then A, B, C, D, E for X, and then A, B, C here for Y. So that's what I'm looking at. This looks like 1, 2, and maybe, or 1, and then A, B, 1, 2, 3, 4, 5. Where's the swing low here? 21,975. 340, so it's there. So 1, 2, 3, 4, 5 here. And then this is 1, 2, 3, 4, 5. So probably 1, 2, 3, 4. This very well could be wave 5 complete here, guys. Look at that. It gets right up there to that 1618 target level. So there's a good chance this may be done. Let me zoom in a little bit here. But if it has one more, it looks like it's only 3 down here. So if we can get a breakout of that swing high there at, what is that there? At 32,720. If we can do that, I would be looking for it to rally higher there again with one more push higher. Target up there, right around 34, 33. And then I'd look for the pullback. That's the idea though here, that this would be like a 1, 2, and then 1, 2, 3, 4, 5. 3, ABC is 4, then heading back up. Let's see here. That pullback, oops. That pullback is around 38.2. See? So it looks like a wave 4 possibly there, but we need the breakout to go higher, right? So, yeah. Leonard is saying JM Bullion has a 10 ounce for spot deal running right now for silver. All right. All right. So just in case you guys are looking to buy some silver. Troy asking, any thoughts on why crypto miners have lagged so much this cycle? I know they are their own companies and aren't directly correlated to the price and performance of Bitcoin, but most of them are at levels Bitcoin was at when it was in 20,000. Well, you basically said what it is. I know you're looking for some deeper meaning into it. Miners tend to lag. A good place to look at this and see this happening is gold miners, right? Gold miners are lagging gold price. They're historically, almost seems like historically undervalued at this point, right? But generally speaking, they should continue higher with it. But again, being that they're companies and they're not Bitcoin itself, just like gold companies, gold mining companies are companies. They're not the gold itself, right? The gold is just what they're selling and producing and whatnot out there, right? Mining for. So you're going to have a lot of other headwinds and stuff that come in, as people get involved with those, because it's not directly just gold, right? Or in Bitcoin's case, Bitcoin miners' case, not just directly Bitcoin. But to me, they just look like they've just, done some pullback, and, looking for them to continue higher, generally speaking. So I may post a few more charts. It's been a while since I've done it, but I may post some more charts there on Twitter if you guys are following me. TX West Capital. Okay. So I like what I'm seeing there. Okay. But these right here, we want to see on gold and silver. We want to see if we can get the little breakout to potentially push a bit higher before we get a bigger pullback there. We'll see what happens with them, guys. But anyway, I'm going to get out of here. We went a little bit longer with the guests. Hopefully you guys didn't mind that too much. Make sure you guys are following them. They're really great people. A lot of good information. Andrew usually has the heads up for stuff long before anybody else does, because he's got his old TradFi connections from when he was in his institutional days. So he's got some connections there with the BlackRock ETF people and some others as well. So good stuff. But anyway, hey, listen, I really appreciate you guys checking in with us. As always, remember, the only thing you control is how much you lose. So, keep working on the risk management, guys. No matter whatever else you're trying to do, risk management is the most important thing you're going to do day in and day out as a trader, okay? Other than that, hey, listen, we've got a 35% off discount going for our group coaching, 3, 6, and 12 months. And it's not just a one-time. If you join, before this special is up and you get that and you want to renew, whether, again, it's 3 months, 6 months, or 12 months, you can do it at the same 35% discount for as long as you continue to renew. No matter what we do with pricing, no matter how much we raise it or whatever, and great stuff there. So we've got that going right now. If you're in the U.S., happy Memorial Day weekend. Please, please, please don't blow off a finger or anything. Don't drink and drive. Come back to us next week. We'd love to have you here. Okay. And if you do join, guys, say hello, say hi. I would love to know that you've joined. Welcome you in, get you going in the right direction and everything. Okay, guys. But I really appreciate you guys as always, tuning in with this and following me and, just giving me a reason to post things. If you guys didn't follow me and didn't comment and retweet and all that kind of stuff, I wouldn't have any reason to be out there posting my thoughts, posting, all the educational stuff I post for free out there, doing these streams, discussing these things, and all that stuff that I do. So that's for y'all. Y'all do that. You keep me going here. So I'll keep doing as long as you keep showing up. All right. As always, guys, I really, really appreciate you being here. Thank you so much. I hope you have an amazing weekend. Be safe. And we'll see you next week. All right. Take care.